Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. So welcome to this podcast, episode 123, titled Great Sustainable Stocks and Funds for 2024. It's presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing mentoring, news, commentary, information, and resources. And look at my newly revised website at investingforthesoul.com. Tell me what you think. Now remember that you can find a full transcript and links to content, including stock symbols and bonus material, on this episode's podcast page located at investingforthesoul.com/podcasts. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, nor do I receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal to you any personal investments I have in the investments mentioned herein. Additionally, quotes about individual companies are brief. Please go to this podcast webpage for links to the actual articles for more company and stock information. Also, some companies might be covered more than once, and there are also 13 article links below that time didn't allow me to review them here. Now, I'm beginning this episode with an article titled Top 10 ESG Stocks to Consider in 2024. It's by Kate Birch and found on sustainabilitymag.com. Here are a few quotes by Ms. Birch on each of her picks. 1. Nvidia, MSCI Rating, AAA. The microchip megastar is one of the biggest beneficiaries of the artificial intelligence boom. The company has built what looks like an unassailable lead in the AI race, accounting for more than 70% of AI chip sales and widely recognized as the best, not just the biggest. MSCI finds that Nvidia, when the chips are down, could do better when it comes to corporate governance. 2. Microsoft, MSCI Rating, AAA. Microsoft is another tech giant getting high on AI. Savvy investment in ChatGPT's creator, OpenAI, has put Microsoft in pole position. Microsoft is working toward 100% renewable energy by 2025, carbon negative by 2030, and has famously set out to offset all historical carbon emissions since it was formed in 1975 by 2050. 3. Best Buy, MSCI Rating, AAA. The tech retail giant has more than 1,000 stores in the US and Canada. The company has pledged to be carbon neutral by 2040 and has already reduced carbon emissions by 2/3 since 2009. Barron's has named Best Buy in the 100 most sustainable US companies for 6 years running, this year taking 7th position. 4. Adobe, MSCI Rating, AAA. and industry-standard software for the creative industries, from design to video editing. The company has set a goal of sourcing 100% renewable energy by 2035. 5. Intuit. MSCI Rating AAA. Intuit has been praised by MSCI for its corporate governance, human capital development, and carbon emissions. You've probably heard of Intuit thanks to its accounting software, QuickBooks, and its company behind MailChimp and Credit Karma too. 6. IDEX. MSCI Rating AAA. Most well known as a company that helps pets live longer, healthier lives via diagnostics and tech innovations. IDEX products help ensure the safety of milk and water around the world, for humans too. Listed in the S&P 500, IDEX employs 11,000 people and has customers in more than 175 countries and territories. 7. Lam Research. MSCI Rating AAA. Lam makes equipment that makes the semiconductors we all rely on, and business is booming. Lam is adopting sustainability across its organization as it aims to reach net zero by 2050 and use 100% renewable energy by 2030. 8. Salesforce. MSCI Rating AA. Everyone has surely heard of Salesforce, the cloud-based software that handles customer relationship management, CRM, and applications focused on sales and customer service. Pre-pandemic, Salesforce was ranked AAA, but that dropped to AA in November 2020, and that is where it remains. MSCI says it is seen as a laggard when it comes to corporate behavior. 9. Pool Corp. MSCI Rating AA. Pool manufactures equipment and machinery for swimming pools and is the largest such company in the world. Pool was upgraded from an A to AA in 2019 in recognition of efforts made to be more sustainable, especially when it comes to labor management, where MSCI says it is a leader. And number 10, Cadence. MSCI Rating AA. MSCI does not recognize it as an ESG laggard in any of its criteria. However, Cadence misses out on the highest ranking as it is well being average on too many criteria, including carbon emissions and human capital development. End quotes. The next article is another ranking. It's titled America's Most Responsible Companies 2024. The cover article is by Nancy Cooper and seen on Newsweek.com. Here are a few quotes by Ms. Cooper. This year, we award 600 of the largest corporations in the United States, up from 500 in 2022. While that increase is noteworthy, even more so is the fact that the company in this year's 600 spot has a higher score than last year's 500th. It is also worth mentioning that 243 companies on the list have placed for at least 4 consecutive years, with 156 earning a spot for all 5 years. This year's top overall position is held by Merck, having an impressive score of 92 out of 100, with Xylem following closely at 91.3, and HP, which held the number 1 position for the previous 4 years, maintaining a solid presence in third with a score of 90.3. 3 companies stand out for scoring 100 in one of the 3 ESG pillars: Dell, Entergy, and Merck. End quotes. Next, back to a familiar favorite sector with this article titled 7 Best Solar Stocks to Buy Now. It's by Jeff Reeves and appeared on money.usnews.com. Now some quotes from Mr. Reeves on his recommendations. 1. Array Technologies, Inc. Array provides technology solutions that support solar array efficiency by moving panels to track the sun across the sky. This includes both the physical rigs as well as proprietary software that points them in the right direction at the right time. Average analyst estimates call for earnings per share to rise from $1.03 per share in 2023 to $1.27 per share in 2024. Revenue is growing nicely, too, with a projected 20% growth rate in 2024. Market capitalization, $2 billion. 2. Canadian Solar, Inc. Though headquartered in Canada, Canadian Solar has also significant international operations, including in the fast-growing solar marketplace of China. And unlike some of the other stocks on this list that only produce solar panels or related hardware, Canadian Solar has a global energy segment that provides the actual power generation from solar farms. This diversification into a utility-style business model provides it a bit more stability. Analyst projections of 26% revenue growth in 2024. Market capitalization, $1.5 billion. 3. Daqo New Energy Corp. Daqo is headquartered in China. Woods Mackenzie published a report in November that stated China will have more than 80% of the world's solar manufacturing capacity through 2026. Daqo's growth rate is impressive, with total revenue of $4.6 billion in 2022, compared with about $300 million back in 2018. Market capitalization, $1.3 billion. 4. Enphase Energy, Inc. Many solar investors are drawn to Enphase both because it's larger than many dedicated solar rivals and because of its impressive 1,489% share price increase over the past 5 years through January 25th. Enphase has made a name for itself by specializing in semiconductor products known as microinverters, which convert energy captured in those cells into reusable energy for homes and businesses. Truist just upgraded the stock in January, and Canaccord Genuity initiated coverage with a buy rating in the past few weeks, too. Market capitalization, $14.5 billion. 5. First Solar, Inc. Founded in 1999, manufactures solar modules mainly serving large-scale developers and operators of utilities or independent power grids for commercial and industrial use. The gloomy outlook for the industry in 2023 didn't take as much of a toll on First Solar, thanks to its focus on bigger customers instead of residential end users, and its powerful position in the industry ensures it can weather short-term volatility as it looks to the future of alternative energy. Market capitalization $15.8 billion. 6. Solar Edge Technologies, Inc. Solar Edge sells current inverter systems for solar installations, allowing the panels to produce alternating current, or AC, power that is transmissible across the energy grid. Unfortunately, the headwinds for the solar industry have been compounded by the fact that this mid-cap solar company is headquartered in Israel. As a result, shares are down a gut-wrenching 76% in the past 12 months. Market capitalization $3.9 billion. 7. Sunnova Energy International, Inc. Sunnova installs solar arrays and energy storage solutions for homeowners and small businesses. It's modest in size. However, analysts expect more than $1 billion in total revenue in 2024, more than 36% higher than expected 2023 sales. There's more volatility with a small and unprofitable stock, but if you want to get in on the ground floor of the residential solar rollout, Sunnova is a good option to consider in 2024. Market capitalization $1.3 billion. End quotes. Now look at some funds with this article titled The Top 5 Sustainable Funds of 2023. AI, anybody? It's by Muskan Hemrajani and seen on Morningstar.com. Here's some points by Mr. Hemrajani on each of the funds. To identify the top sustainable funds of 2023, we screened US-based funds within the Morningstar Large Cap category that identify as sustainable investments. 1. Invesco ESG Nasdaq 100 ETF. Return 55.34%. Morningstar Medalist Rating, Bronze. Maximum allocation, the technology sector. Top holdings, Microsoft 13%, Apple 11.99%. Notable, 10% portfolio weight is in AI stocks like Nvidia and Broadcom. 2. ClearBridge Large Cap Growth ESG ETF. Return 45.99%. Morningstar Medalist Rating, neutral. Maximum allocation, the technology sector. Top holdings, Microsoft 9%, Amazon.com 8%. 3. Parnassus Growth Equity Institutional. Return 45.18%. Morningstar Medalist Rating, Bronze. Key driver, successful rally in the technology sector. Notable, 11% of the fund's weight is in Microsoft. 4. Nuveen Winslow Large Cap Growth ESG ETF. Return 43.5%. Morningstar Medalist Rating, neutral. Maximum allocation, Microsoft 13%, and the technology sector. 5. BlackRock Sustainable US Growth. Return 43.42%. Morningstar Medalist Rating, neutral. Maximum allocation, Microsoft 12.77%, and the technology sector. So note that the returns of these funds were for 2023. Now this article will particularly interest those of you who are fashion conscious. It's titled 3 Stocks Poised for Success in the Sustainable Fashion Trend by Shane Neagle and found on investorplace.com. Now some quotes. Embrace these 3 sustainable fashion stocks for a greener future. 1. Lululemon Athletica. The company makes fashion products designed for health-conscious and active consumers. 2. Deckers Outdoor. In its commitment to sustainability, Deckers Brands has made significant strides in recent years. 3. Columbia Sportswear. End quotes. Now some other honorable mentions, not in any order. 1. Title: Maximizing Tax Deductions, 3 Charity-Friendly Stocks to Consider on investorplace.com by Farzan Farouk. 2. Title: Eco-Friendly Tax Breaks, 3 Green Stocks to Buy Now on investorplace.com by Gabriel Osario Mazzali. 3. Title: There's Still Strong Interest in Sustainable Investing on ETFtrends.com by Tob Schreiber. 4. Title: 3 once-in-a-lifetime renewable energy stocks with unprecedented surge potential on investorplace.com by Matthew Farley. 5. Title: Solar Surge, 3 stocks to light up your portfolio in 2024 on investorplace.com by Jeremy Flint. 6. Title: VEGN, that's the Vegan Growth Fund, VEGN Growth and Expansion Plans on ETFexpress.com by Fiona Nicholson. 7. Title: 7 Stocks Benefiting from the Massive Shift to Clean Energy on investorplace.com by Ian Cooper. 8. Title: Top 5 Solar Energy Stocks to Buy in 2024 for Green Investing on youtube.com by AI Motive Mingle. 9. Title: Just Capital's 2024 Overall Rankings on justcapital.com. I really suggest you go to this for anyone interested in ethical and sustainable investing. It's an interesting ranking. Anyway, it's by Just Capital. 10. Title: The 3 Most Undervalued Renewable Energy Stocks to Buy in February 2024 on investorplace.com by Ian Cooper. Now additional articles from the UK and Australia. 1. Title: 5 Renewable Energy Companies in the UK to Know on builtin.com by Abel Rodriguez. 2. Title: 3 Ethical ASX Shares Poised to Outperform in 2024 on fool.com.au, that's Australia, by Bernd Struben. 3. Title: What were Perla's 5 most popular ESG ETFs in 2023? On raskmedia.com.au by Nick Nicolaides. Well, these are my top news stories with their stock and fund tips for this podcast titled Great Sustainable Stocks and Funds for 2024. Now, please be sure to click the like and subscribe buttons on Apple Podcasts, Google Podcasts, or wherever you download or listen to this podcast. That helps bring these podcasts to others like you. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope and prosperity in these deeply troubled times. Contact me if you have any questions. Thank you for listening. And again, please look at my new, totally revised website at investingforthesoul.com. Tell me what you think. I'll talk to you next on February 23rd. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.